Hello, folks. Welcome to Pro Trader Strategies. I'm Eric Wilkinson, and you very well may recognize me from mainstream media, but what I'm here to do is to give you guys a little bit of insight around some options and how we can implement those into our portfolio around some of our directional assumptions we come up with on any given day. So if you want to learn a little bit more about options, hit that subscribe button. There's also a little bell, a notification there that'll give you guys a heads up when I come on unannounced, because I do every once in a while later on in the day, if I find some opportunities in the markets, I'm going to pop on here and talk about those trades. In the mornings, I'm going to talk about the economic data, the markets, and opportunities I've already found this morning. So without further ado, let's get on with it. But before you go, make sure you guys smash that like button. It really does help us out. And hey, if you guys want me to talk about anything, throw it over there in the comment section. I'm going to try and keep an eye on that. But as I talked about yesterday, my computer is on the fritz. We're going to actually postpone today's webinar on the swing trade. All right. So the reason why is because I keep losing my main screen over here and it starts fritzing out. And I'm afraid that I'm going to lose contact with you folks. So please bear with us. I got a computer coming. I actually, as a matter of fact, I ordered a computer because of this problem and they sent it to me. I use a minimum of 2 screens. I don't know about you folks, but I use 2 screens. And who has a screen that needs VGA? Seriously, does anybody have a screen that only takes VGA? Just a fun fact about VGA. In 1984, IBM invented that connector, and it is basically obsolete right now, folks. It'll give you about 360 or something like that, and we're at 1080 right now on the dot spectrum. So, all right, without further ado, let's get on with the economic data and talk about the markets here. All right, across the pond, not really a whole lot going on here, but here in the United States, we got all kinds of stuff. We got preliminary GDP coming in at 6.6%. It was supposed to be 6.7, folks, so just slightly lower than expected. Unemployment, preliminary prices, 6.1, slightly higher than the 6% there. So we're seeing prices start to ratchet up there again. Preliminary GDP, a little bit lower. Prices paid a little bit higher. Not usually a great sign here, folks. Unemployment claims 353, higher by about 10,000 than what was expected there. And remember, it's the Jackson Hole Symposium. Yes, I did say that I thought Steve Leisman was going to be fly fishing with some of these folks. That's what his usual mantra is. I thought that they might be meeting back up actually in Jackson Hole, but it is online, so I doubt he's doing a whole lot of fly fishing. All right, so let's get on with the markets. We've got crude oil coming off a little bit here today. Strength in the economy showing a little bit of weakness. Now today we do have that Jackson Hole Symposium, and we heard a couple of Fed governors speaking. They are talking about the taper. So possible talks of the taper happening in November, at least coming from the Fed governors. Now, something from the floor perspective, folks, is that generally speaking, what we see from these Fed governors is they usually go too far or not enough fast enough. So right now, what I would say is, the Fed has a lot of making up to do or make some right turns here. The fact of the matter is they're talking about raising interest rates when we've started finally seeing the economic data start to crink a little bit or see chinks in the armor, right? So I don't think we're still going to see this Fed tightening. They might talk about it. They are not going to start the Fed taper until at least next year, especially with the economic data that we've been getting as of lately. Gold futures making a little bit of a move higher here. Bitcoin, listen, I've been talking to some folks lately. Some people have been reaching out to me about starting a mining operation. At the end of the day, you guys, you're going to spend a lot of money. It's kind of like you would rather be the power provider than the actual person producing the Bitcoin. I think your profit margins are a little bit better there. Trying to mine a Bitcoin these days is not probably going to work. All right, so it's going to be a long slug, folks, especially if you are paying any kind of rate for the electricity. Something also, a lot of these college students are plugging into their dorm to mine some coins. Free electricity, I guess. Anyway, bouncing off of the 50-day simple moving average is the bonds here. You know, when we heard the Fed governor speaking at the Jackson Hole Symposium, we started getting some weakness here. A bounce off of that. Why? Well, somebody started dropping bombs in Kabul, and it's seemingly the Taliban. We don't know how many people are really injured at this point, but it was apparently a couple of suicide bombers near the airport as people are trying to get out. That's where they ended up showing up. Now, that's weakness in the equities. It almost happened when the market opened, and that's where we saw the weakness. We'll see that show up if we break down the daily chart into a 15-minute chart here. You can see basically this is right around the area when we started hearing about those bombs going off in Kabul. So we've got the Dow Jones off as well. We were seeing some positive gains here earlier this morning, but now off of that information and a little bit of turmoil going on in Afghanistan, the United States, Europe, not looking so great on the economic data. Maybe we're seeing a little bit of a slowdown going on. Keep that in mind. Playing to the downside, I would say still risk more so to the downside. Now, I've covered most of my shorts when we got that sell-off. Now I'm long and looking to cover those and add some negative deltas to my portfolio because I'm overall long there. Travel and leisure was doing very well for a while, but we are seeing some weakness here, as we can see in the charts. If I blow this up a little bit for you. Now, we're getting this pattern here. We've had a nice move. Usually when you get these dojis back to back, whether they're green or they're red, that is usually a continuation pattern, okay? So we're going to have to keep an eye on that. I think that the market might still want to push a little bit higher here, but this setup here is a big question mark. Sometimes it acts as a top, sometimes it's a continuation pattern. No follow through in either direction here. So we're going to have to keep an eye on this. I do have on long positions for the travel and leisure, especially in the gaming sector. If you guys heard my soapbox about the gaming sector. Anyway, they've had a bit of a run here, and it might be the time to start covering some of these. If you guys remember, I talked about this. I've done some dollar cost averaging. I'm trying to get out of these relatively soon here. So I've got a working order to get out for 7 cents. They're the 30, what are they? The 35 puts in there, I think, or something like that. I'll have to double check. I can't see my monitor right now, so I'm lost. All right. So with Macy's, travel and leisure doing bad. Now we've seen we've heard about, not Macy's, Nordstrom's not doing so well. Folks aren't really buying there. Macy's, you know, they've always struggled, and I don't know if they're going to do it any that much better. They did give some good forward guidance and all of those things, but I think that this part of the retail sector has had a bit of a move and is probably a little bit overdone at this point. So I'm looking to add some negative deltas using Macy's. And with that, I went into the November. I want to limit some of that theta decay. Why? Because you can see we have extremely low volatility down here. And if we have low volatility, then we want to be buying options. Why? Because volatility really is the dictator of our premiums, right? So if volatility is extremely low, the thesis is that premiums are extremely cheap, right? So then we would lean toward buying. And if volatility is extremely high, as volatility jacks up, our premiums start inflating. Well, that would be the time to be selling options. So if I'm looking at this chart down here at implied volatility, I'm looking at something that says, hey, these premiums are pretty darn cheap. This is the opportunity to be buying. So with that said, I'm taking a bearish position here in Macy's. So I'm going to the November to limit that theta decay, right? If I'm buying something, I've got to be a good steward of my capital. I also need that low volatility, because if volatility expands, and even if Macy's starts moving higher, I could actually see this position work out nicely. I'm not playing on that, but what I try to do when I'm implementing an option strategy is turn the tables in my favor. If I have extremely low volatility and this market starts juking back and forth, maybe not even going anywhere, but premium starts going higher, well, I bought low, can still sell high, despite the fact that I might not necessarily be directionally right. I go through all of that, those levers and pulleys in the webinars. Unfortunately, like I said today, with my computer issues, I got my computer screen back right now. With those computer issues, I'm not able to really confidently go through a full hour webinar, not being able to answer questions and seeing what's going on for the most part, flying blind. Kind of like I'm doing right now, but in these daily spot the trades, I pretty much know what I'm going to talk about, and I have my notes on a piece of paper. So, all right, Macy's, playing this to the downside. Like I said, November, limit that theta decay because I've got really low volatility, and I forgot to calibrate my thing. So hopefully this pin works now. So going into the November, we got it. November Macy's. I'm buying the 21 puts in here, just slightly lower than where we currently are. It's basically about a 36 delta. I talk about that in the webinars when we're talking about buying options. That's kind of the sweet spot. Somewhere between 45 and a 35 delta is usually what I'm looking for buying these options. Volatility, I want this to be relatively low. And I'm not even talking about down here at this number. That number really doesn't mean anything. What we're trying to do is find this location within the range of where the underlying's been in the past, okay? Because every underlying has its own volatility coefficient where it has an extreme high and an extreme low. And what we're trying to do is play off of that. It's kind of a swing trade. They have a tendency to roll in that. Macy's being at around 61, we could see something like the ETF never get as high as that. So ultimately what we need to do is look at our implied volatility for this underlying and compare that to what we've seen in the last, say, 6 months. Okay. And I've got the formula to throw over there in the side that you guys can, the code that you can add to your watch list that gives you that indication there. So reach out to us at trading@protraderstrategies.com. I'll get that to you. All right, so the 21 puts in here, I paid $1.78, all right? Now, I paid a debit for this trade, all right? If it goes down to 21, that doesn't mean I'm out of the woods, right? I need to actually make up this difference at expiration, all right? So my break even on this trade is that strike, the 21 put strike, that buying that put gives me the opportunity to sell stock at 21, all right? So if it goes down to 20 or whatever, I can still sell my stock at 21. Now, remember, I don't get back this $1.78. That pays out. So when we're looking at this, I did the 21 puts and $1.78, then you need to subtract that out of this, and what we're going to get is $19.22, right? So that's my break even on this trade, right in and around somewhere here. That's at this date, okay? That's because then all the theta would be out of it and I would make up for it as an in-the-money option. But if the market starts juking relatively quickly and we get a volatility start to expand, which is what we usually see when the market starts to sell off, I get both of those in my back pocket. I make money on my directionality being right, and this volatility will give me a little bit of a bonus to that push, all right? So I'm trying to get all these levers and pulleys turning in my favor so that I don't have to rely on the market actually making it to my break even at expiration. During the life of this contract, if we get this sell off relatively quickly and I don't have that theta really eroding my premiums and volatility expanding, I'll be able to get out of this for a very nice profit. Now, on this profit, I'm looking for a 50% increase in my premiums on this. So I'm looking for about, let's just call it a 90-cent increase. So I would be getting out at around 270, let's call it $2.70, 90 cents higher. That's right around there, ballparking it. So that would be where I'm looking to get out of this trade. Hopefully we'll at least come down and test this value area high at around $21. That's what I was looking for on this trade. A quick move to test this value area high, which also, as you can see, has acted as, let me do a better line than that, has acted as resistance in the past. That will act as a support if the market comes back down to this level. All right. So that is Macy's. I kind of dwelled on that a little bit too long. Travel and leisure, though, I also wanted to talk about. We've seen some nice moves to the upside here, whether it's in the casinos. We can look at Penn. I've got on Las Vegas Sands, like I talked about, that I'm trying to get out of on Las Vegas Sands. Sprint doing very well. Las Vegas Sands trying to get out of this trade. We look at travel and leisure the airlines are not looking too good here. AAL, all of these look very similar in chart setups. If I'm going through the airlines or the casinos, maybe some of the hotels as well, a lot of those charts for that travel and leisure looking very similar. Are we getting a continuation pattern, or is this a top? We don't know yet. We need to wait for that confirmation, and we have not received that yet. So we'll keep our eyes out for that. Again, sorry, folks, that I'm not going to be able to get this video shot later on this afternoon. We're going to figure something out and try and shoot that at another time for you. All right, so keep your eyes on it. Make sure you guys click the bell next to the subscribe so that you guys get an indication when I'm going to be shooting videos unannounced. Also smash the like button for us. It does help me out. And finally, comment over there at the side. I'll circle back around for anyone who wants to comment over there, and I will chat you back to make sure you're clear of concept. All right. So without further ado, if you can't take that, take it easy.